Hey, everybody, welcome back to another episode of the Growth Capital Podcast. I'm your host, Justin Dixon, and today we've got Trey Ikard. He is the managing partner of WIV Ventures. They are a venture fund here in Austin, Texas that focus on investing in early stage fintech startups. This is kind of a cool episode because we talk a lot about kind of the Austin startup ecosystem. We actually talk a little bit about how he started his own fund and that there's actually a fund accelerator out there that will help you kind of develop your own thesis as you're starting to build your own investment fund. And we talk about kind of what are some of the kind of red flags that he sees, some of his startup founders that are pitching to kind of raise money from him. What are the red flags that he kind of avoids in that market? And then we talk a little bit about kind of where he sees the market going here in Austin and broadly when it relates to kind of the venture capital space. So really cool episode. So let's get Trey on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. Hey, Trey, man, thank you for being on the podcast. Happy to see you.
Thank you for having me.
Yeah, well, I'm excited to kind of unpack our conversation here. So maybe start out the audience, giving them a little bit of an update on who you are, where you are, and what you're up to right now.
Yeah, my name's Trey Ikard. I'm with WIV Ventures here in Austin, Texas. And it's a newly emerged fund that I just launched last year, focused on early stage fintech companies.
And how did you get to this point, right? You're here in Austin, you've launched this new firm. Like maybe give us a little bit of snapshot, on some of your early career. Because I always like to understand kind of people's journeys to, where they are now. Some people start in very technical careers and then they move into kind of venture capital or private equity. So maybe give us a little bit of a snapshot on early Trey.
Yeah, so I went to school here at the University of Texas and then got out, was trying to figure out what I was going to grow up and be next, and happened to stumble or be fortunate enough to have a friend of the family who is an individual by the name of George Kosmetsky, who is truly the godfather of founding all of the technology in Austin. And he was the dean of the business school and had transitioned into a think tank. And I went and was talking to him, and he said, listen, I just started this new thing called Austin Technology Incubator, and why don't you go intern there? And not knowing anything about technology or startups, I rolled over there and was just bitten by the bug. And the excitement of technology and entrepreneurship, I spent some time there and then started a company with some friends called Hillcast Technologies, and we invented the first network-enabled app, and this was pre-BlackBerry, pre-iPhone, and we were taking institutional data from Wall Street and streaming it to BlackBerries, flip phones, all this, and created a lot of traction with the carriers and device manufacturers, and ended up selling into banking and fintech, and that drove that company for a while, and then rolled into a company called Message One that was here that did business continuity, and then had some other startups between there, and then got into a group where we were doing an asset management play for children's indoor entertainment, and it kind of got gutted by COVID, and was trying to figure out what to do next, and was speaking with some VCs who were friends of mine. They're like, Trey, go start a fund. And ended up going to Google and stumbled across a group called VC Lab, which is an accelerator for launching a fund. And 16 weeks later, I was off to the races.
Interesting. So I want to kind of unpack that a little bit, because I think, you talked a lot about the startup world here in Austin. Maybe give a little bit of kind of, a picture into the past, I guess, if you will, of your kind of mentor or key kind of person, this George, you said Kosmetsky, I guess. Back then, how did the landscape look in Austin, and maybe how did it change over the last, number of years? Because obviously, now, Austin is kind of I'll call it maybe what do they call it? Silicon Hills, kind of the little kind of brother of Silicon Valley. Was he kind of the driving force in kind of shifting Austin from being, the capital to being this kind of tech hub?
Yeah. I mean, he was the individual that advised Michael Dell not to send his checks back because he couldn't make the computers, and said, I'll set you up in Adobe. And so he had also come from the Valley, San Francisco. And so he had seen how technology had really been running. So he was very essential with establishing bringing in a lot of companies, establishing the connection between technology and the University of Texas and MCC, which did a great deal. And it's been interesting to watch it grow. We went through a stage of the .com days, which, it was kind of unbelievable. And on the sense of, there were companies out there that were requiring $100,000 investment just to sign an NDA before you'd even see their business plan. So it was, and people were doing that. And then, we had that kind of crash of the .com, and and I think that was kind of good because we realized that there needed to be more and establishing more around technology and working together. But it's an interesting time right now, and the city's come a long way.
Yeah, I mean, I've only been here for about 4.5 years, and so it's I've even seen it kind of ebb and flow, right? I feel like when we moved here in October of 2020 from Philadelphia, Austin everybody was moving here. This is kind of like the kind of peak COVID October 2020 timeframe, and now real estate here is quite expensive. It's kind of flattening out and even declining a little bit from a single family perspective, and it's kind of in this lull, I feel like, but it's still this kind of beacon in Texas to kind of attract tech companies and companies moving their headquarters here and all that fun stuff, which is great to see. I guess as you kind of started your career, you said that you started a business that was building network-enabled apps. I guess, how did you kind of transition from not knowing what to do, getting involved in kind of the Austin Tech Incubator, to then, starting your own business? I'm always curious about, people that have the steel and the kind of ability to take the risk of starting their own business as opposed to going to work for, another company.
Yeah. I was sharing an office with some other people that were working in technology. I was working for a company that was actually doing web development, and we had been talking, and then all of a sudden one of the guys down the hall said, "Hey, I just figured out how to do something." And, and then it became, that's a viable business, and so we basically went and tried to figure out, if anybody would have interest. And we ended up going to Motorola, which happened to be here in Austin, and they couldn't believe what we did. And from there, we were like, okay, we need to start a business. So, and it ran from there.
Awesome. And then how did you pivot into children's indoor experiences, you said?
It was
you go from big tech or tech to more of a child experience company.
So I was getting a little burnt out of technology, and was approached by some friends that wanted to do a roll-up around family entertainment businesses. And so we said, yeah, and, it started rocking and rolling. Everything was great. And then until COVID hit, and when COVID hit, it just got absolutely gutted. And, and at that point I was ready to go back to technology because, something that we're very fortunate in technology with not having to deal with is the general public. You can just send emails and this. You don't get complaints from just random people saying you've ruined my entire life, on stuff like that. So that's, how I kind of transitioned.
Got it. And now you've launched a fund. So maybe let's dive deeper into WIV Ventures, and maybe let's start. We were talking a little off air. What does the name mean, and how did it come about? I think it's interesting.
So, I want to say that there's no meaning, but there may be a little hidden meaning there. So, at the time I was having my wife was having our first child, and I was at the hospital, and I was working on a deal, and a lawyer called me and was like, "Hey, we need a corporate entity to do this with. I need the name of something." And I didn't want to use, my last name because, as my grandfather once told me, if you put your name on anything, it just means you're the first person to get sued. So so I started just randomly coming up with names, and the lawyer was like, "Sorry, taken." I'm like, "Oh, what the hell?" And my daughter's name is Windsor, so I was like, "How about WIV?" And my family had an old brand from years ago when they were in the cattle family here in cattle ranching here in Texas. And the lawyer goes, "Yeah, that's available." And so I had that corporate entity. And so when I started my fund, I knew nobody had WIV, so I knew it'd be easy to transition that entity into.
That's so funny. You just kind of started throwing letters out a little bit and said, "Hey, that works." And now we're on.
Why your wife's in labor? So,
That's right. Yeah, you're doing a business deal while your wife's in labor. At least it turned out well in the end, which is great. So let's talk about this. How long have you had the fund? And I think you said you went through like some type of accelerator to help you build it. Like maybe walk through that, because I'm curious. Because I've talked to a number of, I used to do a lot in real estate investing, and people were starting fund of funds and all of that. I'm just kind of curious what it looked like for you, doing it on the venture side, and then we'll start to unpack kind of the businesses that you're actually investing in.
Yeah, so I was talking to several VCs, and they were like, "Hey, Trey, you've never had trouble raising money. You should go start a fund." So I went where everybody goes to start anything, and that's Google. And was looking at Columbia has a great private equity and venture program. HBS has one, and some other schools, and they were all great, but they're very theory oriented. And I was like, that's great. I don't need someone to tell me how to do this. And I happened to stumble across VC Labs, which is an accelerator. And in 16 weeks, they take you from not knowing anything to launching a fund. And they help you drive to create a thesis. They help you, get to a point where it's realistic, so of all the components to it. And then, as you compress, they have done an incredible job. And the most amazing thing about is the program's completely free, and it's run by individuals who believe that there's a lot of problems in the world, and the only way that we can fix all these problems is through venture. And their goal is to launch 7,000 venture capital funds globally. So it's a great community, great organization. I'm very honored to be part of it. And, we're off to the races, and got a lot of people that were in my cohort with me that, I can lean on and count on and get information from them, and we share deal flow and back and forth. So it's been a tremendous experience for me.
Interesting. So VC Labs is effectively an incubator, accelerator, because you think about those when you're trying to build a startup, right? You go in there with an idea and you come out with a business. This is more of you go in with, I want to start a fund, and they help you kind of think through what your methodology or thesis is for your fund, right? Because as you start to raise money, I'm assuming you need to tell the investor, unless they're really good friends with you and there's like, "Hey, Trey, here's my money, go deal with it." You've got to actually share kind of what your ideology is, what your thesis is on the types of businesses you're going after, et cetera, right? So they kind of almost help you create that business plan kind of idea, but also like how you can speak to investors about how you're evaluating the companies that you're going to, invest in. Is that a very simplified
absolutely.
version?
I mean, I walked in there with no thesis. I mean, literally, I found this program on a Wednesday. The deadline for the application was on Friday. And then I think a week or two later, I got accepted. And my theory was, I'm going to put together a, $50 million fund with I'm in Austin. I mean, there's technology companies in there with no specific direction, with zero experience in venture. And they were like, "Listen, Junior, you need to back up a little. First of all, you need to roll the fund back to around, 10 million that's manageable and get started and build track record. Also, you need to come up with a thesis. Where's your background? Where have you worked? What is your expertise where you can really add value to deals that you're putting in?" And I was like, great. And they helped put that together, which is great. And And where VC Labs was inspired from was from the Founder Institute. And the Founder Institute is a great organization that I'm a mentor on that helps, which one of your previous guests, Sydney, I met her there as an advisor. Or as advisor to her, and they help companies basically take your idea and create a business. And then one of the things that they realized is that, hey, we've created all these businesses. We need to help get them money. So that's where VC Labs became falling.
Interesting. I like the Founder Institute. Obviously, actually, Sydney's podcast launched today, April 1st. So shout out to that podcast.
She's awesome.
She was great. And it was a very interesting conversation with her because she created a physical product. A lot of people that I talk to and get introduced to, are in the tech world and they're creating apps or software or SaaS businesses, et cetera. And so she has this kind of safety, product for people, which I thought was really interesting. And to kind of hear her go through her process. And so maybe we can use her a little bit as an example of shifting to the Founder Institute piece, because you're obviously involved as a mentor in this Austin startup ecosystem, but also I'm assuming you're also using it as a way to vet or look for, investment opportunities. So how does the mentorship kind of piece funnel into kind of how you think about and maybe some of the startups that you've thought about investing in? So
coming from, as I tell people, moving from an operator to the dark side, venture, it's very interesting to me because and it's also a little challenging because I understand how difficult it is to be an entrepreneur, and I want to help every start. I've been in those rooms when it looks like the world's about to crash down on you, and It's like if somebody would just help me, I would greatly appreciate it. I don't care what it is. Sharpen a pencil, get me a Diet Coke, help me figure out my taxes. I want to help, but startups as much as possible, and it's hard for them to basically keep that ball rolling with everything that they have to do. And now I'm beginning to ramble, so I'll try to wheel this in. But it's a great experience. Founder Institute to help these guys say, listen, here's the plan, follow the execution, keep this. Because when it comes down to it, that's what's most important for all startups is to have the plan and execute it.
And I guess if you could maybe think about it in a way of like, okay, here are the top 3 things, because I do some angel investing, and so I get to see some of these earlier stage startups across different industries. And I'm kind of curious to get your input on like the kind of the top 3 things that startups are always asking for. I have an idea, and I'm sure the audience does too. But I guess maybe what are your kind of common themes? Maybe common themes about like where they need the most support when they're trying to start a business.
It's always money.
Yep.
And especially from being in the venture side, it's always money. And there's a real issue with which has recently been brought to my attention that I'm trying to figure out how we can fix this. But California creates companies that change the world. Austin creates good businesses. And we haven't had a $10 billion exit come out of Texas. And we need to. And there's a lot of different people that say why and whatnot. And I think a lot of that has to do that companies in Texas and Austin specifically are more focused or don't believe that they can start a business without raising capital. And so capital becomes the number one thing that they're trying to find instead of generating revenue.
God. Okay. So you're saying that you think businesses should be more focused on growing maybe organically or thoughtfully versus just automatically deferring to going out and raising as much money as possible?
Yeah. I mean, well, I look at some of the incredible companies that have come out of the Valley, and a lot of those companies took capital when they really didn't need to, but they were creating it. And I don't see a lot of that in Austin. I mean, a lot of companies say, listen, we need, $1 million, $3 million to launch this great business, and they end up launching great businesses. And I'm not saying that this is the completely wrong way, but I'm just saying if you look at some of the companies that come out of the Valley, I mean, these companies are generating significant revenue, and then they're like, okay, we need to really knock it out of the park. We're going to take down this huge chunk of capital.
And I think go ahead.
And I think that's because a lot of people in Austin are creating businesses around problems that they're solving instead of finding out if someone will pay them for the problem that they'll solve.
So they're not validating the problem if it's significant enough that somebody will pay for it to be solved? Is that kind of where...
Yes, I would say. I mean, it's can you get and will someone pay you for? Hey, if we build this and pay for it, it's not necessarily validation. I mean, validation comes from all over the place. But it's can you create a viable business? Is the problem create a value where people will pay you to do that? And I think that if business focus on that, I want to invest in businesses that don't need my money.
Yeah. Let's shift to that. Kind of what are some of the business themes or theses that you're trying to look at that are, ripe for, I guess, your investment dollars? Like what type of businesses are you really kind of going after? You mentioned fintech, but are there specific industries or niches within the fintech space?
So right now our fund is focused on early stage fintech. And when I say early stage, I'm looking for companies that have just had or just completed their product and about to get their first customer or just got their first customer. And out of the broad word of fintech, I would kind of minus out crypto. I'm really kind of staying away from stuff generally around crypto, but insurtech, payments, regulatory issues for banking compliances, all organizations that I'm looking at. There's anything that basically has a component of commerce around it is that I can justify to my limited partners, then we'll invest in it. And I'm not anti-crypto in any sense. I just, regulatory issues need to be worked out a lot, and it's just placing other people's money and investment that can be basically changed by either a company or government overnight is a little scary.
Yeah, you definitely, you don't have a lot of control in a lot of things, but crypto seems to be, wherever the wind flows, things may change overnight as far as that goes. Yeah. Okay, so you've got these kind of early stage businesses, and you influx with some capital. What else are you also then kind of providing mentorship and support to them, or does it depend on the founder how much you actually get involved?
My goal is to help transition these companies after we make investments into a Series A component. And being a operator, I'm there as much as you need me. I'm not someone that's going to go force my way into your office and say, listen, here's how we're going to do stuff, because I'm investing in these people for what they can do and what they can that they can execute. And so I want them to do that. All of the people I think, or the portfolio companies that we have, all know they can call me at any time, which they do, and say, hey, can you help me here? I have this issue. Sometimes I play psychiatrist, and just listen to problems. To sometimes listen, let me make some calls and I'll make a connection for you for business.
Yeah, I was going to ask that. I thought that might be kind of the second or third kind of theme or need outside of capital is kind of the network and the connections of like, hey, we're trying to get access into these companies, and maybe people in those companies to sell into, or kind of some of the network access that you bring to the table also kind of value add to these businesses?
I would say yes. I would, from my where I sit, I would say that, the mistakes I've made are more valuable than the access of contacts that I have. Entrepreneurs probably wouldn't see it that way, but, I was working with an entrepreneur the other day who had a tremendous opportunity with Wells Fargo. And And they were so excited about it, and I told them walk away. And they were like, dude, you don't understand. It's Wells Fargo.
You're right.
And I'm like, listen, you're 5 guys and a dog. I was like, you guys are not going to be able to negotiate a valid price with these guys because they're experts at negotiating with technology companies. I was like, 2, they're going to have a service agreement that basically every time the phone rings, the business is going to have to shut down to address whatever issue they have, or they'll sue you into the ground. And you're 5 guys and a dog, so you can't support any of this. So just give them a price and walk away. But they wanted the validation of the press release so bad because they think that proves something. And as I was trying to explain to them, listen, I had tons of great press release for companies that went out of business. Yeah. This town is paved with great press releases of businesses that don't exist anymore. That's not what's important. What's important is making good decisions, that generate revenue, that keep this company going.
What's the outcome? Did they take your advice and walk away, or did they?
They ended up taking my advice, and I ended up connecting them with a licensed vendor that worked with Wells Fargo, and so we'll see how that works out. But the vendor was going to try to take their product in.
Got it. Interesting. Well, yeah, sometimes it's better to kind of partner up with a bigger fish that can help negotiate better terms. Maybe let's zoom out a little bit more broadly. And are you only investing in Austin-based startups, or are you opening it up to all of Texas, all of the country?
I'm trying to stay focused in Texas. Our LPAs allow us to invest anywhere in the U.S. The portfolio companies we do have portfolio companies that are in California and some in Texas. So I'm looking at deals all over. Right now I think it's one of the greatest times in humanity to start a business. With what AI has done, where valuations are, with the capital that is circling around the tables, it's right now is awesome. So you don't want to basically, from an investor, focus on, hey, small area. You want to see deals all, as broad as you can.
Yeah, I think, I kind of, when I talk to a lot of people that have kind of, we invest in the Midwest or we invest in wherever, it's kind of an 80-20 rule. It's like we try to allocate a lot of capital to this core audience because that's where, we're based, but we also have a fiduciary duty to our investors to make sure we find some of the better deals, right? So I think, you've got to open up the aperture a little bit. And so going back to kind of what you mentioned about kind of being a great time, I think I'm curious because I talked to a lot of private equity folks and kind of your earlier stage, obviously, than some of the PE folks that are kind of getting in at that Series A, Series B. It feels like they have deals on their books that are aged that they probably would have liked to have sold, a few years ago. But then their investors are starting to ask for their capital back. So there's kind of this like really kind of push and pull of kind of deal flow at the kind of, call it $10 to $100 million mark. Obviously, you're investing at an earlier stage. Are you seeing more activity in the venture world than maybe some of the PE folks are that are a little bit downstream?
Capital is tight right now across, board, because it's an entire food chain that goes from the largest guys from Tiger Global all the way down to smaller funds like me. And it's a lot of it has to do with just general uncertainty. And we just got out of of the 2022, 21, where there was so much money on the table. Valuations were through the chart. And those companies, there were a lot of businesses that were taking money that probably shouldn't have been taking money. But the problem is the VCs had to deploy them. So now that we've kind of gotten out of that, I think politics is starting to, the uncertainty of where our markets are, from where politics, coming off an election to having a new president, that there's a lot of uncertainty, and that stops capital. Whether the markets are going up or down, the world can address that. But the uncertainty of not knowing what's going to happen tomorrow stops capital in its tracks. And I think that's where we're at a point right now. And I'd quote you the number, but I can't remember. But the amount of cash that's on the sideline right now is absolutely incredible. It's just not being deployed.
Yeah, it was funny. Kind of pre-election, a lot of the private equity firms were kind of in pause mode because they had plans for either candidate, but they didn't want to move forward because they weren't sure who was going to get it. And then now that Trump's in office, it's like they have that plan going forward, but the tariffs and some other things have kind of caused some uncertainty. And so there is still this kind of logjam where people are still kind of a little bit in wait and see mode. I was at a conference a couple of weeks ago, and it was very much we thought Q1 was going to be super, aggressive and very fast paced. And I guess deal flow hasn't kind of launched as fast as they thought. And so now it's like, okay, well, maybe Q2, Q3 is kind of where things may start to open up. And it's, if people start projecting out 6 months, it's kind of like, I don't know if they know kind of what the story is, right? And I think nobody knows kind of where directionally we're going to go. But to your point, uncertainty is way more volatile than if we know if we're in a recession, well, at least we know how to operate in that environment, right? If we're in a bull market, we know how to operate in that environment. But with this uncertainty, there's a little bit of uncertainty of where we're going to go. I don't know if you think that's kind of the direction or kind of what people are thinking.
I do. I mean, great companies come out of tight markets, and and we're definitely in a tight market right now. And it's. I don't have a crystal ball of how it's going to play out, but it will play out. And good deals are good deals, and there are companies out there that are basically fighting through the issues of not being able to get capital, not getting able to get the resources they want, and they're figuring out how to kick open those doors and continue those companies. And as those companies go forward, when the capital comes on, people will be beating on their door to get them money.
Yeah. I want to kind of shift a little bit to maybe red flags that are like automatic red flags when you see a pitch deck or hear a pitch from an investor that is seeking your money. What maybe 1, 2, or 3 things that you're like an automatic no if they don't have this, do this, say this. Like what's kind of some red flags for you from an investment standpoint?
It's funny. I was having a conversation with another VC about this just last week. What the red flags are. It's a hodgepodge of things. I would tell people when they pitch to keep it very simple. There's one thing that eats me up, which this other VC was saying, you didn't know why I did. But when anybody tells me that, that they have an incredible social media network, and this product's going to run around, is basically the kiss of death to me, because that's not a marketing. Just because I know a lot of people doesn't mean that those people are going to transition into buying on that. But it's, understanding the numbers is really important, and understanding the execution. And, I like seeing companies that, which starts to be kind of a red flag when they start telling me they're, it's 5 guys and a dog, and they start showing me the market of America and, and how they're going to execute. Where I'd much rather them win a market, because that math is real simple.
Yeah.
And, and another thing is no financials. There was a report done by the University of St. Andrews that stated that they were trying to figure out what makes unicorns. And they went through and did this huge study, and they found one common thing that separated companies that failed and companies that became unicorns. And that was the companies that succeeded all implemented GAAP accounting from day one. That was the only real statistic that, but it makes a lot of sense. And, and one of the things that I ask for after every phone call is send me your financials. And it's not because I think that those financials are going to show me anything really incredible numbers. It's really just to know that they know how to basically put together financials, put together forecasts, and understand how to basically manage capital. Yeah,
no, I think that is a good summary, and I'm going to have to check out that unicorn statistic or study. That sounds very fascinating. I know you said you don't have a crystal ball, but I guess if we can kind of look at the future, if we jumped on a podcast a year from now, what do you kind of think is going to happen broadly, and then what are you trying to accomplish in the next 12 months with WIV Ventures?
So, AI just ceases to amaze me. I mean, the stuff that's coming on board with AI is incredible. What it's doing, and the solutions that are popping up daily, each day, it's just amazing. And I think where we're going to be a year from now is going to be unbelievable, with the solutions that AI provides. And I am trying to close our fund down, and launch fund number 2 is where we are. And so we're doing a hard capital push and looking for more early stage fintechs.
Got it. So your goal in the next 12 months is get fund 1 out and then start on fund 2.
Yeah.
Got it. Fair enough. Well, this has been super interesting to kind of drive through your experience. And also I appreciate you allowing us to dig a little deep into the Austin kind of startup ecosystem, because it is a very fascinating kind of group of people in Austin. I've gotten a chance to work with a number of them and see, some people come across the angel investing kind of group that I'm in. It's super fascinating what people are building, because I've got a services business here, and, being able to start an actual business that has a product, whether it's physical or digital, is kind of super impressive to me as far as that goes. So
it's a great city. We have so much. It's unbelievable. I mean, we've fallen in, all the pieces are in place for, this ecosystem to work for everybody.
Yeah. Yeah, I agree. I agree. Well, let's kind of transition here. I've got a 3-pack of questions that I ask every guest to kind of round out the show to get a little bit more insight into Trey. So I guess give us an influential book, business book, can be a kind of motivational book or a podcast that you found helpful in your life or career.
So, I usually read reports, so I don't have a lot of books. But the last influential book that I can say that I really enjoyed reading was Never Split the Difference by Chris Voss, I think it was, which is a great book on negotiation.
Yeah, no, I listened to that book on Audible at least twice, and I saw him do, he was on that Mastermind app for a while, and I checked out that a while ago. So definitely appreciate that book. All right, what is your favorite thing to do outside of work?
It's probably a toss-up between hanging out with my daughter, who's 12, or having cold beer with friends at Deep Eddy.
Deep Eddy. I've not been there. Interesting. Okay.
It is a great dive bar on Lake Austin Boulevard. Everybody should go there at least once.
I will have to check that out. And then favorite vacation spot?
Ooh. Abaco, Bahamas.
Abaco, Bahamas.
Abaco. Yeah. Not a lot of people know about it, which is great. But incredible water, incredible people.
Well, now that you've mentioned on the podcast, at least 4 people will know about it. So yes. it's going to be overrun with people. So awesome. Well, this has been really cool to get to know you a bit more, Trey. If people want to reach out to you, maybe learn about your fund, maybe learn about your career, talk about kind of startup mentorship and all that fun stuff, like what's the best way to connect with you?
They can find me on LinkedIn at Trey, Trey, Ikard, Ikard, or I can find us on my website, wiv.vc.
Awesome. Trey, man, it was really cool to chat more. Appreciate your time.
Thank you so much. This was a lot of fun.
I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.